Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm so excited to welcome you to another promising edition on the Extreme Speed Live for Tuesday's session. First of all, before we kickstart the session, let's run through our daily routine just to quickly confirm that we are all on the same page. So, if you can see my screen and you can hear my voice loud and clear, please let me know in the comment section by typing in hi. Thank you very much, guys, as I look forward to your feedbacks, and then we will be starting right away. All right. Let's see what we have in the comment section. Thank you very much for your feedbacks. From Nagendara, good morning. Edge Lopez, Badex, good morning to you. Gaius, thank you very much. Tiplix, I hope I pronounced that correctly. Thank you very much. Hello, Carrie. Good morning to you. Thank you for those positive feedback. So, all right, I think with this handful of comments, let's take this as a confirmation that we are good to go this morning. And it's on this note, I welcome you all once again to yet another promising edition on the Extreme Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as we will be delving into the financial landscape, looking at things from a technical standpoint, using our basic tools, of course, trend lines, key levels, and chart patterns to unravel the potential trajectory of price action today. And in fact, since the week has begun, we have been monitoring four major financial assets, which includes the US All Spot, the US Tech 100, the XAUUSD, and finally the USDJPY. Though the week has started a little bit slow, we of course market participants try to digest the NFP data that came in on Friday, and of course the hawkish remark by the Fed chairman during the course of the weekend as regards to keeping interest rate higher for an extended period of time. So this dynamics here has been shaping the current landscape, and of course we are gradually fine-tuning our way to the next big move that will happen for this week. So I encourage us all to stay tuned in so you don't miss out on any of the interesting ideas I have to share with you today. And of course, I also have very simple trading setup that you want to include into your arsenals for today's trading session. And before we go deep into the detail, I want to inform you, unfortunately, that we may be seeing some scammers we may lock in the comment section, attempting to entice you to other platforms with promises of quick riches or false opportunities. Please be aware that Extreme Speed is not affiliated with any such individual or platform. So please take your safety seriously, and I urge you to exercise caution and refrain from engaging with suspicious links or offers in the comment section. So, with that being said, here we will be diving right into the business for today. And that reminds me, I know there will be some newcomers in the house. We may be wondering what this is all about and what is it that we really do on the Extreme Speed Live. Well, first of all, as technical traders, we usually gather here every day, coming together as a community and engage in follow-ups and reviews of our current trading positions in preparation of the New York session. This session officially kickstarts 10 a.m. UTC, 11 a.m. West African time. So I recommend that you stay tuned in so you don't miss out on the insights that we will be sharing. And also note that my aim here in this community is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, trust me, the more time you spend with us, the better you will become at comprehending our analytical approach and, of course, utilizing the information gathered here to enhance your own trading decisions and strategies. So, once again, I extend a warm welcome to you and encourage you to actively engage in the comment section. So, with that being said, we will be diving right into the business. And the first thing we normally do every morning is to keep tabs with the fundamental factors that are likely going to be influencing the market sentiment for today. And based on the assets we have been monitoring since the beginning of the week, which of course includes the US dollar and the Japanese yen, we shall be focusing on high impactful event from both of these economic dockets. However, for this week is not really laced with high impactful event, as the impactful event for this week already happened yesterday. That's the prior to yesterday morning, we saw the Fed chairman speech where he emphasized the high inflationary pressure in the United States and how interest rate is likely going to be kept higher for an extended period of time. Then we also witnessed the ISM services PMI from yesterday, which of course gave us an insight into the service sector of the United States, and the data that came in was quite impressive, giving us a 53.4, which was beyond the expected 52, and of course beat the previous month data, which was at 50.5. And of course this further emphasize the resilience of the US economy, which we have been observing, of course, in the last 3 weeks in this community. Now, going into today, Tuesday, February 6th, we do not have any major impactful futures, of course. So we have a couple of speeches which everyone is looking forward to today. And the first one on the list is the speech from Patrick Aka, who is the President and Chief Executive Officer of the 3rd District Federal Reserve Bank at Philadelphia. He is going to be giving a speech today, and being a voting member of the Federal Open Market Committee, his words, his remarks is going to be holding some weight as market participants will be scrutinizing his rhetorics to identify or project what the policy of the Federal Reserve will be for the nearest future. Then later on today, in about 7 hours or so, we look forward to Loretta Mester's speech. Loretta is the president and CEO of Federal Reserve Bank Cleveland branch, and she's also a member of the Federal Open Market Committee in the formulation of U.S. monetary policies. So whatever she says here also will be having a major impact on, having a major influence on the sentiment in the market. And of course, we do know that as we anticipate this event, it has a tendency of influencing the market reaction, which of course will reflect on the chart as price action. So talking about price action, we shall be diving right into the details. But before I do, and due to the continued spam messages I'm seeing in the comment section, I want to reiterate that we should all be aware of scammers that may lurk in the comment section, attempting to entice you to other platforms with promises of quick riches or false opportunities. Excuse me. So please be aware that X Speed is not affiliated with any such individuals, and please take your safety very seriously. And I urge you to exercise caution and refrain from engaging with these links from these people in the comment section. So with that being said, here we will be diving right into the business. And as usual, the first asset we will be taking on this morning is going to be the US All Spot. And in the last 24 hours, the market condition here has been a little bit choppy. We've had situations where we bought, we had situations where we sold yesterday too as well. And in both instances, price action did not move significantly as we saw price coming back into our entry point, taking us out at a worst case scenario break even. Now, from yesterday's all sell position initiated during the New York session yesterday have been closed at a worst case break even, has oil witnessed a surge in buying activity, especially during the Asian session to break out of that resistant line we identified at the $72.78 area. Remember, during our session yesterday, we acknowledged the fact that price was initially confined within that range between the $72.78 area and, of course, the $72.20 level to emphasize the prevailing uncertainty in this particular market. And usually, whenever we identify a range like this, we want to see price action either break out of the support line of the range to give us an opportunity to sell, or the breakout of the range to give us an opportunity to buy. Now, what happened yesterday was the breakdown of the support line, of course, and for those who missed out, the market came back to retest the structure, I think a couple of hours into the New York session, retested it, and then we saw price move to the downside. It moved about 75 pips thereabouts before the buy pressure came in, and of course this was a significant move to the downside, and I do hope you moved your stop losses accordingly. If you did, you must have been taken out of that position had a worst case scenario break even, or let me say a small amount of profit depending on where you placed your stop losses to. Then, as the session went on, the New York session went on, we saw engulfing bullish candle, which led to the breakout of that resistant line of that range at the $72.78 area to trigger a buy stop order, which we of course placed above that end. And as at this morning, we saw price move significantly. I think about 50 pips thereabout before this choppy situation came in. And as at this morning, when I open up my chart, and due to the consolidation phase, about a couple of hours ago, I moved my stop losses to break even. I hope you did so as well. If you did, you must have been taken out of that one. But if you didn't, then price action will currently be trading around the entry point at this point. So it's still within the scope of a bullish expectations in this particular market. However, it is important to note that this upward movement could be attributed to this slight decline in the US dollar in recent times. Since the Asian session, we noticed that the dollar was finding some selling pressure, which could be a retracement move from the momentum from last week. Meanwhile, geopolitical tensions in the Middle East are serving as a potential buffer against the downside of oil prices. Now, following the U.S. Retaliatory attack on Friday against Iran's allied militias in Iraq and Syria, market sentiment is poised for heightened uncertainty at this point. And of course, it is evident on the chart, as you will see, price action has been going through a choppy situations as market participants digest the dynamics of these geopolitical tensions in the Middle East in order to make a well-informed decisions. Now, as the market seeks fresh impetus or catalyst going forward, I'm of the opinion that oil traders will be waiting for Thursday release of the Chinese Consumer Price Index and producer price index for January, any sign of weakness in this data could exert downward pressure on oil prices, given the fact that China's status as the world's second largest oil consumer. Against this backdrop, we will definitely rely on the structures we will be identifying today to guide our trading decisions going forward. And then Tuesday and Wednesday, we are looking forward to the API and the EIA stockpile report, which of course will also be giving us an insight into the supply demand status of the global oil market. So at this juncture, what is going to be our plans for today? How do we intend to capitalize on the next move as price still goes through a choppy market conditions? Well, before we go into the details today, as usual, we would like to take a quick look at the higher time frame so we can have an holistic perspective into what is going on in this market. And this also will make those who are joining us for the first time be on the same page with us. So at the beginning of this week, after taking into consideration the nature of price action since the month of September, that's about 5 to 6 months of historical data, we were able to come up with the fact that price action has been very bearish. And as a result, we did connect the series of lower highs here, giving us a couple of descending trend line, which you can see on your screen right now. However, the most important trend line amongst these two that we will be using for today is this one right here, which we saw price come back to retest the structure last week Friday, and since then we have seen a situation where price action still remains above the structure to emphasize some potential uptrend scenario. Well, before that, despite the strong bearish momentum, we saw that since December, the first week of December, we saw how it had become difficult for sellers to continue their momentum to the downside as soon as price got into that area within the 68 and the $72 zone, making that area a demand zone for us to watch out for any potential uptrend scenario. And during the course of last month, I think about 2 weeks into last month, we saw how price broke out of that descending trend line for the first time in about 6 months. And from a technical standpoint, when price breaks out of a key trend line like this, we expect that at some point price may come back, retest that structure, and the emergence of buy pressure or maybe a reversal pattern could incite an uptrend continuation. And if you look at what has been going on here in the last 3 to 4 days, you will see that as soon as price came back into the descending trend line, it retested it, and of course since then we have noticed continued buy pressure resume from that particular area. And what makes this whole development interesting is the fact that it also shares a confluence with that demand zone we identified earlier. So it more or less says here that we are within the buyer's territory, and of course depending on how participant in the market reacts to this area will determine what our next line of action will be. So to make things easy for us to position ourselves for the next move, we have our key level for this week located around the $72 area, where depending on how market participants reacts to this structure will determine if we are going to be buying or selling this asset. And for those of you who have been with me for a while now, you know how we use our key levels in this community. When price remains above our key level, we want to be looking out for patterns and structures that supports the idea of buying that asset. But if price can break through, breach the key level, then this might likely lead to opportunities to sell the asset. But as it is right now, price remains above the key level, remains above the ascending trend line, and of course remains above that demand zone. All these factors here is supporting a potential uptrend scenario. Now to further emphasize this structure, we have a structure here on the 4 hours time frame, which I also want to call your attention to. Now, right here on the 4 hours time frame, what we did here yesterday was to consider the nature of price action in the last 2 weeks, just to have a clue into what has been going on in recent times. And when you look at this from a technical standpoint, it's clear price action has consistently and uniformly found higher lows in this market. And when we connect the series of higher lows here, we have an ascending trend line to work with for this week. And you know how we use our ascending trend line. As long as price remains above the ascending trend line, we want to look out for patterns and structures that support the idea of buying the asset. Now, if I zoom into where price action has been since last week Friday, you will see that price action has been finding buy pressure right above our key level that we identified on the daily time frame, and right around that ascending trend line where we have a beautiful confluence to monitor price action. Now, as it is, price action is finding buy pressure above the structure, which further supports the idea of looking out for buying opportunity. Now, scaling further to the downside, things becomes a little bit clearer as we saw how price action has been playing out since the beginning of this week. Now, with the situation we have here, price action is back above the resistance line of that range we identified at the beginning of the week, which of course is an area we shall continue to look out for buying opportunities. Now, another thing I also marked out on this chart this morning is the highest point price action has been for this week, which is the $73.7227 level, where I have another buy stop order above that structure to capitalize on more buying opportunities if price action breaks out of that same level again. So at this point, we have a buy position triggered. We're looking out for more buying opportunities above the $73.27 level. Now, there's one more thing I would like to buttress here, which of course supports a reversal setup right here on the 1 hour time frame. Now, this comes after considering the strong impulsive moves in the last couple of weeks, leading into a situation where it appears that price action is transitioning into a reversal pattern in the form of what is looking like an inverse head and shoulder pattern, which theoretically is considered to be a strong reversal pattern, where the neckline of this reversal pattern is sitting along this ascending trend line we have here. Now, if price can break out of this trend line to the upside, this will further give us a good opportunity to be part of an uptrend move. Now, interesting enough, this trend line here also shares a confluence with the highest point that price action has been for this week, where we have noticed selling pressure here. So a breakout definitely will confirm to us today that buyers may likely take advantage of the geopolitical tensions in the Middle East, serving as a buffer against any downside on the oil commodity. So on this one, and based on what we have right now, I'm holding on to a bullish bias, looking out for more opportunities at the breakout of the $73.27 level. However, in as much as we're looking out for buying opportunities in this market, you know how we do it in this community. We always try to keep our options as open as possible. Now, in this case scenario, there are chances that sellers could also come in. And what are the things we want to see on this chart that will make us negate the idea of buying and start considering selling this asset? Well, if you would ask me, I'm yet to see anything significant that could project that we should be getting ready to sell at this point in time, besides this double rejection of that $73.27 level, as you will see here. Now, the reason why I am not keen to jumping into a sell position right away, first of all, is this engulfing bullish candles we saw here yesterday, which took out all the attempt by the sellers to continue their momentum to the downside. We saw one here, we saw the second one right here. So two engulfing candles within the structure, a good sign that buyers are very strong and present within this juncture. Then another thing that is not making me feel comfortable joining the bearish momentum right away is simply because of the fact that the $72 area, our key level for the week, remember, which was situated within that demand zone we identified on the daily time frame, has been supporting buyers here. Every attempt by the sellers to break through, though we had a little bit of a breakdown here, but you saw what happened immediately after the breakdown. An engulfing candle sprang out from that zone. So for me, everything is looking very bullish, and we may likely see a choppy situation happen here for an extended period of time before that traction begins. So we should be careful and wary of this. So ensure that you have enough breathing space for price action to move around. So that means we are going to be having a wider stop loss on this asset today. Now, for to sell, I would like to see price maintain selling pressure below the key level at the $72 area and that ascending trend line. So if I can see continued selling pressure around this area and persistent series of lower lows and lower highs on our lower time frame, and right below the $72 area may look promising to join a bearish move. So let's keep this in mind while we continue to monitor price action. So this is my simple view on the US All Spot for this morning. I do encourage you to mark out these levels as we will be needing them to guide our independent trading decisions for today. And if you have any questions or you want some further clarifications to this particular asset, feel free to let me know in the comment section. So as always, I will take the next 10 to 15 seconds off to see if there are any questions before we move on to the next asset on our watch list. Stay tuned in. I see you, Panoyo621. I see you, Rajesh7809. Giovanni, good morning to you. Roro Zoom, good morning to you guys, and trust you're doing very well this morning. Brazox is asking a question on how to use his credit. I will suggest you contact the customer service support team. They will definitely give you an appropriate answer to that. You can find them at the front page of this app, right at the top right hand corner of your screen. You'll see a logo with a headset, a head with a headset. Click on it and you will be directed to the customer support team and you will be attended to in due time. Good morning, Rosie E. Daniel. Trust you're doing very well. Glad to have you around with us this morning. So with that being said, and in the absence of no questions, I want to assume that we are all on the same page. And in that regard, Zoom in is asking, where should I put my take profit target? Well, your take profit targets is subjective. It depends on you, and these are subject to quite a lot of factors. Your account size, your lot size, your position size, all of these things tells a lot. So what we simply do here during the Extra Speed Live is to guide you through the most viable areas where you can either buy or sell. Now, depending on your account size, you can factor in the structure to decide where your stop losses and your TP target is going to be like. Now, if you look at the daily time frame here, you will see that we are within a demand zone, which we said here, and the highest point price action has been for this year is around or close to the $80 mark. So having your TP target around that area is quite reasonable if you are long term, if you are looking at this market from a long term perspective. However, if you are looking at it from a short-term perspective, you could have your levels around 75, $77 area. So it is very, very subjective and dependent on your position size, your account, your portfolio size, and of course your risk management strategy. All right. So I hope I answered your question there. Zoom in. Okay, so in the absence of no further questions, I will be moving on to the next asset on our watch list. So the next asset on our watch list for today is the USTech 100, popularly known as the NASDAQ. And this market has been a little bit choppy in the last 24 hours, as we've seen both roller coasters of sells and buys in this market. And we had a sell position triggered yesterday, and of course we also had buy position triggered. We had a couple of losses too on this one too as well. So for the sake of clarity, let's run through these in detail to see how the market went by yesterday and how we intend to position ourselves strategically for the next move today. Now, the first thing we did observe on the 1 hour time frame here on the USTech 100, here's the fact that price action was initially ranging within the $17,639 area and the 17,575 level. Now, you know how we do it whenever we have a range like this. We usually position ourselves at both the resistance line, above the resistance line, and below the support line to capitalize on any of the breakouts. Now, with the situation we had here, we had our buy stop order triggered above the resistance line here, which actually moved, didn't do it very well at all before the bearish momentum came in, taking us out of that buy position in a loss. And of course, we saw the sell position triggered right here. And in fact, price moved reasonably well, like over 110 pips in profit before the buy position came in. And considering the fact that price moved really well to the downside yesterday, I do hope you did move your stop losses accordingly to secure that sell position. And if you had done so, well done to you. You must have been taken out with some small profit or at a worst case scenario break even. Then we saw price action climb back up again to break out of the resistance line, had a $17,639 area, and price is still trading above or within that territory. So we still have a buy position triggered at this point in time. So we're still hoping to see how far this momentum will go. And another thing I would like to also emphasize here, which I did yesterday, but for the sake of those who are joining us for the first time, so you guys can be on the same page with us, is the obvious fact that price action is at an all-time high. Remember, price tested the 17,685, which happens to be our key level for the week, and this is the highest point price action has been in a long time. And there is always a psychological peculiarity to to an all-time high in the financial market. When price gets to an all-time high like this, we usually see the injection of the emotions of fear come into play, where those who had held a strong position prior to price hitting the all-time high may start closing in some of their position out of fear that price may crash from that area. And this usually reflects on the chart as price doing retracement moves, choppy market conditions, and of course going through consolidation phase, which of course you can see is what is going on here since the price tested at 17,685. So it is expected that we see such scenarios happen, and that is why it is very, very important that we exercise caution and ensure that we see significant confirmation before jumping into any positions. Now, to further buttress this, I would like to share with you what we saw here on the daily time frame yesterday that further guided our decisions. Now, on the daily time frame, what we did here was to consider the nature of price action since the last quarter of last year. That's an historical data of about 5 to 6 months. And when we did that correctly, we had a trend line, which of course has been playing a major role in determining the direction of price action since August of last year. Now you can see how this level has been a buying niche at some point. You saw this area. It turned out to be a selling niche here in the month of October, and this continued into the month of the later part of the month of November before price finally broke out of the structure a couple of times here, and then we saw the final one happened about 3 weeks ago, and since then price action has remained above this ascending trend line. And of course, when we have price floating above our ascending trend line, we shall continue to look out for patterns and structures that supports the idea of buying that asset. Now, with this trend line duly marked out, if we zoom into what has been going on here in the last couple of weeks, it is quite clear that price action has been confined within a range to emphasize the prevailing uncertainty going on in this market. As you see, price is currently confined within the 17,685 and the $17,150 area. Now, with price staying within this range, within that all-time high territory, you know how we use our ranges in this community. Whenever we identify them on the chart, we look out for either price breaking out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. But the fact that price still floating above our ascending trend line, coupled with this engulfing bullish candle we saw during the mid last week, I'm of the opinion that price may likely continue this uptrend, where the breakout of the key level at the 17,685 will be all we need to feel confident buying this particular asset. However, in as much as this level has been a strong selling niche for a while now, we cannot ignore the potential that sellers could also jump in from that area, pushing price maybe into the ascending trend line, or even breaking it outrightly to incite a massive sell-off. So all of this we are going to be looking at when we scale back down into the 1 hour time frame for us to make an informed trading decision. So I needed to show you this on the higher time frame so you can have an holistic perspective into what is going on in this market from a technical standpoint. So you can see how that key level at the 17,685 is going to be playing a major role in guiding our trading decisions for today. Now, going back down into the 1 hour time frame, let's see how we'll intend to capitalize on the next potential move. Now, first of all, let's look at the structure here since last week, Wednesday. We saw this. I showed you an engulfing bullish candle on the daily time frame the other time, and this is the bullish trend line. This is the engulfing bullish candle here. If we connect the series of higher lows, you can see we have a beautiful ascending trend line, which I think we are going to use to guide our trading decisions for today. So I just bolden it a little bit to emphasize its importance at this juncture. And if we bring back our candle chart, we have something like this. Let me duplicate this, and we have one right here, and then we have this other one, which I will reduce the pixel. So we have a beautiful ascending trend line to guide our trading decisions for today. And you know how we use our ascending trend line. As long as price remains above the ascending trend line, we shall feel comfortable in our buy position. Now, zooming into the current structure here, price has broken out of that resistance line at the 17,639, triggering our first buy position for the week. And we shall continue to look out for more opportunity if price breaks out of that 17,685 level. Remember, this is our key level on the daily time frame. If price goes ahead to break out of the structure, I will feel very confident in this bullish traction. However, in as much as we're looking out for buying opportunities in this market, considering the strong bullish momentum in this market, we cannot ignore the potentials that sellers could also take over the market. And of course, we've seen some character depicting how sellers are trying to do that since last week, Friday. Now, look at selling pressure here. And we saw here in the last 3-4 hours, price was unable to break out of that structure. And this whole scenario could incite a sell-off. Now, if it does, where are we looking now to sell? Well, considering the fact that we have an ascending trend line here, it will make quite a lot of sense that we consider selling only if the ascending trend line is breached and broken to the downside. Now, interesting enough, we see how the support line of that range we identified at the 17,575 shares a beautiful confluence with that ascending trend line. Now, a breakdown of the structure will reveal that we are back within the seller's territory, and of course we want to look out for selling opportunities only when price action breaks down, retest both the ascending trend line and the 17,575 level. So this is the only condition that will make us consider selling the USTech100 today. So I encourage you to mark out these levels on your chart, as you will be needing them to guide your independent trading decisions for today. And if you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will take the next 5 to 10 seconds to see if there are any questions whatsoever before we move on to the next asset on our watch list. And don't forget to use that time to mark out these levels on your charts. I see you there, Anolua. Good morning to you. You Nigerian, right? That name sounds familiar. Trust you're doing very well, and glad to have you around with us this morning. Abdul, good morning to you. Masio Trade, good morning to you too. Glad to have you around with us. RDJE, good morning to you too. Okay, so in the absence of no questions, I want to assume that we are all on the same page here. And in that regard, we shall be moving on to the next asset on our watch list. So the next asset on our watch list for today is the USDJPY, where we still have our buy position running at this point in time. And for those who had capitalized on this opportunity, well done and kudos to you. Remember, we were building up a bullish setup yesterday, and we shall be talking about that in a moment. Now, the Japanese yen attracted some buyers and broke a 2-day losing streak against the US dollar, especially during the Asian session, giving us signs that the yen may likely try to find some momentum this week. And of course, this could be attributed to a softer risk tone favoring the yen, following especially the Bank of Japan's hawkish tilt earlier this month, and the shift in global risk sentiment characterized by a subdued tone in the equity markets, especially during the Asian session, contributed to the increased flow into safe haven asset of the Japanese yen. However, this has since been subdued by the US dollar. As personally, I think that the bearish momentum we saw from that resistant line at the 148.825 was as a result of the corrective pullback in the US Treasury bond yields leading to some US dollar selling and exerting pressure on the USDJPY. And we do know how the US Treasury bond yield is directly proportional to the US dollar. When the US Treasury bond yields gain some value, this definitely affects the dollar positively. And of course, the other case too, if the US Treasury bond yields drops, the dollar too also follows suit. And this affected this dynamic a little bit this morning, shaking out a lot of buyers from this market. But in the last 4 or 5 hours, the momentum has resumed again. And it is important to note that the growing acceptance of the Federal Reserve's intention to maintain higher interest rate for a longer period of time may act as a buffer for this particular asset. So therefore, short-term trading opportunities will be prioritized using the structures we identified on this chart. Now, if you remember vividly, at the beginning of the week, we saw our price was initially confined within a range, and in fact is still within the range at this point in time. As you will see, price has been ranging within the 148.825 and the 148.275 levels to emphasize the uncertainty in this market. And of course, this whole trading range bound activity has been oscillating right around our key level situated at the 148.500 area. And to remind you how we use our key levels, how does our key level play a major role in guiding our decisions? When price action trades above our key level, we definitely want to be looking out for patterns and structures that supports the idea of buying that asset. Now, during our live session yesterday, we acknowledged this descending trend line, and I did mention that we will be looking out to buy this USDJPY asset if price action goes ahead to break out and retest the structure, which was exactly what happened a couple of hours into the New York session. And then we saw this bullish engulfing candle spring out of that structure to emphasize the strength of the buyers at this particular juncture. And as it is right now, I still want to maintain a bullish bias on these assets as long as price still remains above that key level. And to state here, the only condition that will make us want to sell the USDJPY today is for us to see price drop below the 148.275, which of course has never happened. So at this point in time, we shall maintain a bullish bias on the USDJPY, and let's see how far this momentum is going to go. Now, for the sake of those who are joining us for the first time, who are not part of our session yesterday, let me just show you what things are looking like on the higher time frame so you can have an holistic perspective into what is going on here. Now, on the 4 hours time frame, let me just explain things to you. Okay, let's go to the daily time frame. So I think things will be a little bit clearer here. Now, on the daily time frame, we consider the nature of price action since the beginning of the year 2023, giving us an obvious fact here that price action has been bullish, and of course, we have an ascending trend line to further buttress this. Now, in addition to this ascending trend line was that our key level situated at the 148.500, as you will see right here. And you can see how the 148.500 area had played a major role in determining the direction of price action since the month of September of last year. Look at what happened between September and October. We saw buying niche here, sellers finding it difficult to break through, so it was more of a buyer's territory, as you will see here. And not until the last trading day of the month of November stroke the first day of December, we saw a breakdown retest of that structure for the first time to incite a sell-off. And prior to the beginning of this week, price action has remained below that area. Now, from a technical standpoint, we were actually looking at the possibilities of price coming back to retest the structure to incite another bearish momentum. But the fact that price found an engulfing bullish candle on the last trading day of last week incited that buyers are still very present in this market. So we saw this engulfing bullish candle last week closing, bringing price back into the 148.500. And one of the things we said here yesterday is that we shall continue to buy this asset if price action breaks out of our key level, which has already happened at this point in time, and that the only condition that will make us sell is for selling pressures to persist below this particular structure. Now, on the 4 hours time frame, it is quite clear that the last 2 weeks, I need to show you, I need to make you see this clearly. Let me put it this way. Okay. So let me zoom in so we can see things clearly. So in the last 2 weeks, price action has been confined within a 220 pips range right here between the 148.500 and the 148.350. And what this simply means is that anytime buyers come into this 148.500, we see signs of sellers negating all their attempts, bringing price back down into the support line. Now, since the beginning of this week, since the beginning of this month, rather, we have seen selling pressure around that area, and in fact, this had led into a consolidation phase, emphasizing the uncertainty in the market, which also emphasized how crucial that juncture is. So we were looking at if sellers are going to maintain their stance around that area to push price to the downside, or we wait for price to break out of that structure, which is what is happening right now. So it makes quite a lot of sense that we continue to look out for buying opportunities as long as price remains above the 148.500, as you will see here. So more opportunities await us at breakout of the 148.825. So let's see how far that momentum is going to go. So the only condition that will make us sell, let me reiterate that, is if price will break down the 148.275. So as at the moment, I don't see any sign that will happen. But if it does happen, let's be on standby to capitalize on that move. So we maintain our bullish bias and keep on looking out for more opportunities to maximize this move. So this is my simple view on the USDJPY for today. If you have any questions, feel free to let me know in the comment section. So as usual, I will take the next 5-10 seconds because we are already running out of time to see if there are any questions before we move on to the next asset on our watch list. And don't forget to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. So I see Macedonian 45 in the comment section asking about Ethereum. Okay. Ethereum is not in our watch list for this week. Usually on Mondays, the first trading day of the week, we usually choose the asset we will be monitoring for this week, and we consistently follow through with this asset throughout the course of the week. So since we don't have Ethereum, unfortunately I won't be able to take that. But if you want Ethereum to be part of the asset we will be looking at on a weekly basis, then you can bring it up next week Monday, and trust me, I would do due diligence to it. I hope you get that clear. Elmio Somi, good morning to you. And in the absence of no questions, let's move on to the final and last asset on our watch list. So the final asset on our watch list for today is my favorite asset, and that is the XAUUSD, popularly known as the gold spot. And in fact, our bearish bias from yesterday still remains very intact as price action continues to trade below both the 2035 level and that ascending trend line we identified on the higher time frame. And so since yesterday we have initiated sell positions at the breakdown of the $2027 area. Remember, prior to our live session yesterday, I did mention that I had a sell position triggered after missing out on the breakdown of the 2035, as this transaction here happened during the middle of the night in this part of the world. So I was fast asleep when this happened, but did capitalize on the breakdown of the $2027 area. And I mentioned during our live session yesterday that for those of us who missed out on this breakdown, that we should wait and see price come back to either retest the structure to join a downtrend move or come back into this area. But if you look at this in the last 24 hours, we have seen how that area around the 2027 has continued to be a barrier for buyers in this market, making it a strong selling niche for participants in this market environment. Now, as it is right now, gold has continued to do a range bound trading activity. In fact, this continued during the Asian session, and the upward movement which we saw happened during the later part of the New York session, which may transition to be a retracement phase of the bearish impulsive move, is influenced by a slight deterioration in global risk sentiment, a factor typically supportive of the safe haven appeal. Additionally, the slight decrease in the US Treasury bond yield during the early hours of today was also responsible for exerting pressure on the US dollar, thereby providing support to the gold. However, it's important to take into consideration the fact that market sentiment has shifted to fully discount the possibility of early interest rate cuts by the Federal Reserve following the robust US macro data indicating a resilient economy for the United States. Last week Friday we saw that phenomenal NFP data which came in beyond all expectation, beating all market expectations, and of course beating the previous month data. Moreover, a recent hawkish comment from the Federal Reserve chairman during the course of the weekend, and of course from several federal officials during the course of yesterday, implies a commitment to maintaining higher interest rate for an extended period of time. Now, this stance is likely going to bolster the US Treasury bond yield, which in turn will favor the US dollar assets and potentially capping the ascent of the gold prices. Now, given these factors, the bearish perspective adopted from yesterday's live session remains very valid as long as price remains below the key level around the $2035 area, and of course that ascending trend line we projected on the higher time frame. Now, for those of us who missed out on yesterday's session, let me show you what we saw on the higher time frame that made us to feel comfortable selling the XAUUSD. So what we did on the XAUUSD at the beginning of the week was to consider the nature of price action since last year October, and we have this ascending trend line that buttressed the strength of the buyers in this market as price action consistently went through a series of higher lows in this market. Now, in addition to that trend line, we had our key level situated at the $2035 area, which interestingly is still around that trend line, where if price trades below the key level, we want to be looking out for selling opportunities. And since the week has begun, you will see that price action has been oscillating just exactly around that ascending trend line, making it a crucial zone for us to look out for trading opportunities. Now, the question as we headed into this week was that will price respect both this ascending trend line and retest this descending trend line to incite an uptrend scenario, where it will make quite a lot of sense for us to buy only if price action can break back above the $2,035 area. But if price continues to stay below the 2035, well, I think the idea of um, no um, the idea of maintaining higher interest rate for an extended period of time could lead into price breaking down this ascending trend line to incite a sell-off in this particular market. So you can see how crucial that $2,035 area is for us for this week. And since price is trading below that structure, it makes quite a lot of sense for us to sell. Then right here on the 4 hours time frame, after considering the nature of price action in the last couple of weeks, we had a couple of ascending trend line here, where the major one is this one that we will be using for this week, was finally broken at the beginning of this week. So this is the ascending trend line that I was talking about that shared a confluence with that $2,035 area, and we saw price break down that ascending trend line yesterday to signal the potentials that sellers could be dictating the pace going forward, considering the hawkish remarks from the federal officials. But since the breakdown happened, we have seen price go through a consolidation phase, which of course reveals that there is some level of uncertainty going on in the market right now. But I'm of the opinion that this may transition into a downtrend continuation pattern where the breakdown of this range could incite a massive sell-off to the downside. But in as much as we're looking out for that possibility, we cannot ignore that price may still come back to retest the 2035 to incite a downtrend move. Now, to help us navigate this unclear or uncertain environment, we have a beautiful setup on the 1 hour time frame that will make things easier for us to navigate this financial landscape. Now, right here, you can see the $2,027 area. And as this morning, I did identify this temporary trend line, which of course shares a confluence with the 2027, and it appears price has broken that structure. So we'll continue to maintain a bearish bias, and in this case scenario, we are going to be having a wider stop loss so that we can contain any potential volatility that could happen in this market, as price could still retrace back into retesting the 2035 to inside that downtrend move. So we shall maintain a bearish bias in this market, and of course look out for more selling opportunities to maximize the potential of this bearish move if price action takes out the lowest point for this week at the $2,015 level. So this is how we are going to be managing any bearish expectations in this particular market. However, if price finds it difficult to find new lows, and we see a situation where price continues to find higher low here, this could build up momentum to incite an uptrend scenario. And if this is going to be the case, what is it that we would like to see on this chart that will make us feel comfortable buying and adding more buy positions to our existing trade? And like I mentioned on the daily time frame, I would like to see price climb back above that key level at the 2035, and of course that ascending trend line to give me an opportunity to buy, and a further breakout of the 2042 could welcome more buying opportunities. And what are the factors that could support the bullish expectations in this market? Well, the most important one is the geopolitical tensions in the Middle East, which of course usually support the appeal for safe haven assets such as the gold. And then the other factor that could also support the ascent of gold is the sluggish recovery of the Chinese economy, which are still wasn't it yesterday we had the PMI data from China, which came in below expectation, which is not something good. considering how sensitive the manufacturing sector is to the Chinese economy. So at this point, from a technical standpoint, I will just advise us to use the structure here. As long as price still remains below the 2035, we will continue to look out for patterns and structures that supports the idea of selling, and we are not buying unless price breaks out and retests the 2035 level. So this is my simple view on the XAUUSD for today. I hope I made myself very clear. But if one way you think I need to do some clarifications, or you need me to emphasize some factors which you didn't get, please feel free to let me know in the comment section. So I will take the next 5-10 seconds. I think that will be okay to wait for comments or questions before we go ahead and round off for today's XAUUSD Live technical session. And you can use that time to also mark out these levels on your chart. All right, so in the absence of no questions, I want to assume that we are all on the same page. And it's at this juncture we have come to the end of the XAUUSD Live technical analysis session. And so far today, we were able to take on 4 major assets on our watch list, which includes the USOILSPOT, the USTech100, the USDJPY, and finally my favorite assets, the XAUUSD, popularly known as the gold spot. And on all of these assets today, we were able to identify simple trading setups that we will be using to strategically position ourselves for the next move. And we also talked about the major speeches that are coming up today that could have an influence on market sentiment, of course. And as a result of this, we were able to mark out some very important levels on the chart and trend lines and chart patterns, of course, to guide our decisions for today. And I do hope that you were able to mark out this level as we illustrated during the course of the session. If you had done that, kudos to you, well done. And what we want to be doing right now is to exercise patience, and let's wait for price action, the structures to mature before we can jump into any positions. Now, always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. And with this understanding, you want to be having a well-defined risk management strategy in place to ensure that you mitigate against any risk that will affect your account. And for those of you who are joining us for the first time, I do hope you were able to gain 1 or 2 things from what we discussed here today. If you did, I look forward to seeing more of you. Trust me, the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information you gather in this community to make your own independent trading decisions. So I look forward to seeing more of you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing, at the same time prepare ourselves for tomorrow's trading session. I wish us all the best of luck today, and trade smart, trade consciously, and do have a wonderful evening, everyone. Bye bye.